Hello, trading is closed on January 30th, 2018. My last call said that the pattern was one with an early high and a tendency to rally throughout the day. I said it was usually positive and we could tell early on if we were going to have one of those negative days because it would drop early. And that's what happened. We get to cross our January 24th MEJT target off the list, and you can see it was a good support level today. During the day, MEJT said that rally was false and prices would retrace, which they did. We had some higher targets. I said they might fail, but even if I didn't say it, when you gap strongly in the undesired direction, they're really off the table. They might still print, but I'm not predicting that they still print. Well, what about tomorrow? We should have a day with an early high. It's one of my turn dates. The truth is, I can make a case for prices going up or down tomorrow and explain it after the fact. Let's go over what's positive about the pattern and what's negative about the pattern. First of all, according to DeMark's criteria, gapping under this line makes it a valid break. We have to go under today's close by a tick, 1 cent. Otherwise, the break does not count. But one of my trading rules is when you have a diagonal trend line like this and you break it in a straight line, at some point you tend to return to the line. Doesn't have to be tomorrow. It's just something to keep in mind. I think the chances that we've seen the high for this leg are pretty good. We stopped right on the dot. I know one else likes this wave count except me, but it did call the peak within a point. Can't get too much closer than that if this break holds. Well, what's negative about the pattern is we rallied all day and couldn't close over any of these highs. It's also a pattern which almost always closes near the high, and when it doesn't close near the high, it's very negative and leads to lower prices. All this negativity would be invalidated if we were to gap up and promptly take out this high. What's positive about the pattern is we hit an early low and we couldn't break it. Typically leads to higher prices. It's invalidated if we gap and promptly take out this low. It's also positive we have a wall into the close, which tends to gap higher. Here's one of my favorite indicators, the McClellan oscillator on the NASDAQ. There's no signal till you reverse, go over the lower Bollinger Band, but when you're this far under the band, it usually means you're extremely oversold. Often there's a reversal. Here's the VIX. You have a bar completely over the upper Bollinger Band. Tends to indicate panic selling. There really isn't a buy signal till you reverse and go through the band, but at least you're in a place where a signal could happen. When this pattern fails to hit a new high, almost always it goes down in pretty much a straight line here. That didn't happen, and even though this looks pretty ugly, if I'm reading it right, I think there's a chance that we zoom higher tomorrow at the open. It's a guess. Guesses can be wrong, but because I have conflicting signals, I think the most likely thing is we gap and promptly move outside of the day's range. Next most likely is we close a little change and have the big move on Thursday. Again, neither one of those things absolutely has to happen, but almost always one of them does. I think the most likely thing is we gap outside of the range, most likely higher. That being said, I think it's a matter of time until we go under this close and under this low, and if so, undertaking a low would be what we need to confirm that the tide has turned. Tomorrow's call is most likely a gap outside of the day's range, most likely up, but I'm making somewhat of a guess, and we'll see if the guess works, and that's today's call.